What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is March 10th, 2022. Please go ahead, click the like button on this video, and also subscribe to my channel. Let's take a look at the markets for today. We're going to talk about the price action. We're also going to talk about my trading for the day. Before we do that, quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, don't YOLO your entire account to any one of my trades or anyone's trades for that matter. All right. So what a tumultuous day of events and emotions, team. So yesterday we had the big mega bounce in the indices. And today it was looking like, hey, we might get a continuation of that bounce. We do have our inflation numbers coming out at 8:30 a.m. But so long as those don't come in above estimates, hey, maybe we can stage a nice equity rally. Well, we can see basically what happened was the inflation data did come out at 8:30 a.m. and we had a really high inflation print, but the print was right in line with expectations. So under that scenario, it's like, hey, that's not really too bad, but really the kicker was that the ECB, the European Central Bank, they had a meeting overnight and they basically said, hey, we're going to start tapering our QE program. We're not tapering it. We're going to end the QE program a bit earlier than expected. They're saying they're going to end that QE program in Q3 of 2022. So here we are. Now we have an inflation scare, and all these central banks, rather than being like, oh, there's a potential shock to the system, let's go ahead and start easing, they're in a position where this inflation shock is here, and they have to stop printing money all at once, because I'm sure they're worried that their money printing is contributing to this inflation. So yeah, it's like the market is getting shocked, and at the same time, these central banks, they're pulling away their support for the market very quickly. So yeah, that was another incremental negative catalyst. To be honest, I think we could have done just fine if it was just that inflation print. But yeah, that news from the ECB, that was the real kicker. We've been talking about this for the past few weeks, but the market just continues to only receive bad news. It's like, oh, inflation's high, Russia-Ukraine conflict, now North Korea is, sounding off again. We have central banks pulling back stimulus. Like, it's a very, very tough environment. So all things considered, that brings us to our box scores. Did the market do so bad today? No, not really. We had the S&P 500 finish down 0.47%. We had the NASDAQ QQQ finishing down 1.11%. IWM small caps only finished down 0.19%, not too bad, basically flat. Dow Jones down 0.37%, and the ARK Innovation ETF finished down 3.52%. You can see that the volatility across all of these indices declined for the session, which is great. This is the biggest vol crush we've seen in the past, several days, weeks, whatever you want to call it. The VIX has just been really stubbornly bid. So it's kind of funny. The market was down, but this is a positive divergence that the volatility was also down. Breadth was negative, but well off the lows we made this morning. In the morning, we essentially had like washout breadth. There were barely any advancers, but by the end of the day, this really built and built and built. And you can see most of these indices closed at the upper end of their daily range. So yeah, there's a lot of ways to look at this glass half full. Intraday, the market just looked horrible. This brings us to our Finviz Heatmap. Everything was just blowing out to the downside. Like AMD, a popular semiconductor's name, this one was down 7%. Micron, very similar. Apple was down like a good 4 or 5%. Tesla at one point was also down, a good 5%. So yeah, it was pretty much like indiscriminate selling into around lunchtime. And then somewhere around lunchtime, some buyers stepped into the market to support it. Energy names, this is not what we want to see. Energy names were very bid. And what's interesting is that crude oil actually closed down on the session, but we got this green action in the energy stocks. So yeah, Heatmap doesn't look all that great, but intraday, this thing was just like a sea of bright red. Sectors, we can see that the gold miners once again bounced up 2.05%. Again, this is ranked in terms of momentum. So we have the GDX up 2.05%, energy up, utilities up, real estate up. Basically a lot of very risk off areas of the market were actually doing pretty well, hedges, etc. We had materials up 0.27%, retail basically flat, regional banks flat, and we had consumer discretionary up, which is good. A lot of these more risky areas of the market, though, they've really got hit. And look at this, the KWEB ETF, Chinese technology, got hit by 9.75%. This was a huge move. I closed out my KWEB exposure yesterday. And yeah, this is pretty nuts. And I do think it's pertaining to my thesis from yesterday that with this Russia-Ukraine conflict, and when Russia invaded Ukraine, we basically obliterated their financial markets. I think investors are concerned that something similar could happen with China, where if they go, hey, Biden's a weak president, let's go ahead and invade Taiwan, all of a sudden anyone that owns KWEB or the FXI ETF could suddenly have that ETF blow up in a ball of flames. So it looks like, the ETF is pretty much preemptively blowing up in a ball of flames. Check this out. Since the Russian invasion, this is really losing its luster. Look at this on the weekly chart. Geez, so KWEB, these Chinese internet names, they're trading back down to levels not seen since, I might have to go to the monthly chart here. Look at this. Oh my gosh. Trading back down to levels literally from when it IPO'd. Yeah, look at this. This was, I don't even know when this was, 2013. Oh my gosh. So yeah, this would not be happening unless people thought, hey, there's a very legitimate delisting concern here. So yeah, really got sparked. Let's take a look at the S&P 500. Let's see what we got here. So again, S&P 500 was down 0.42% as measured by these ES futures. So they actually increased slightly after the close. My trend model is at a +1. So incrementally getting more positive. Could this be us carving out a bottom here? Take a look. This is kind of becoming very similar to what we saw at the end of January. A lot of times a bottom, it's not like a specific point, it's a bottoming process. So this could be a nice step in the right direction. But again, intraday, it really looked like we were slipping into the abyss. So we closed pretty much just right on top of that 5-day EMA. That's really like the first technical hurdle that we have to clear. And take a look if we go to the hourly chart. So overnight, we got our test of this weekly value area low. And it really looked like, oh my gosh, we were just going to slip into the abyss. Hey, maybe we're going to test these lows at around like 41.50. But we got a nice bounce into the end of the day, which is good. And now we have that weekly value area low, 42.90. That's right back within striking distance. So all is well that ends well. And this is why intraday, I pretty much told our members, like, hey, I'm going to step off the desk for an hour. The market is pretty much just like gyrating around, super volatile. And what matters the most to me is the close. What actually happens, once all is said and done. So yeah, it can get really taxing if you're watching all the intraday movements. In the morning, it looked like we were going to rally. Then we had this huge red candle right here, pushed us back to the lows. And yeah, around lunchtime, you can see that we carved out a bottom. And then the VIX, of course, let's talk about that. Take a look at the VIX. So the VIX actually broke below some levels here. The VIX closed out at 30.23. VIX above 30 is never a good thing. But hey, look at this. We're on a 3-day downward trend in the VIX. Now we're going to retest this 20-period moving average for the first time since mid-February. So hey, VIX is still elevated, but at least we're moving in the right direction now. So what I would love to see is the VIX get below a 30 tomorrow, or even in the days following that. And then maybe we can finally start to get some relief in the market. But while the VIX is this elevated, we're still going to have this crazy market volatility. Let's take a look at the NASDAQ. NASDAQ finished down 1.18%. Very similar pattern here, not much different to say. Russell 2000, only down 0.23%. Not bad. Look at that. The Russell basically closed right at that monthly point of control. Does this look like a horrible candle? No, put in a hammer candle. That's really not bad at all. Then we have our dogs of the Dow. Dow Jones finishing down 0.25%. Same thing, also put in a hammer candle. So it looks like this could be carving out a bottom. Take a look at some of the bigger names within the S&P 500. One is Apple. And Apple looked pretty ugly intraday, but now this one also looks like it could be putting in a double bottom here. So yeah, tough to rule out the market when we got this nice action into the close today. And then of course, let's check out crude oil before we jump over to my trades. Crude oil finished down 2.62%. This has been the big problem in the market. Everyone's like, oh my gosh, these energy prices are going so high. And today we got another down day in crude. So this is really what we want to see, just from like societal, easing essentially. Like we don't want to see like everyone having to pay like $1 gajillion to put gas in their car. The people get very upset, and the markets also get very upset as well. So this is a good thing on all fronts. The energy prices are heading lower. All right, let's check out some of my trades for today. Dun, dun, dun. Yeah, I didn't do a lot of trading for today, but I did get long some CrowdStrike via these April 14th calls. I got the 200 strikes. And then towards the close, I got long some SPY 426 calls as well. Because it really looked like intraday, we did have some capitulation going on in the market. As I've been mentioning, just with very heavy selling. CrowdStrike, this name reported strong earnings and went up about 12.5%. You can see we're trading above this monthly value area high. And cybersecurity, which this company is a leader in that space, I think that space is poised to do pretty well, given that that's one of the major threats we face as a country now. We don't want to get hacked by China, Russia, etc. So I think there's going to be an increased emphasis on that space moving forward. And then of course SPY took those calls as we approached the bell, really just because I saw like, look at the candle SPY put in, nice green candle, and we know that a lot of investors were probably capitulating today. So those are my trades for today. I kept it pretty light. While the market's been this volatile, I've just been trying to do less and also look at the screens a little bit less, to be honest, because while the market's not really behaving the way that we want it to, I think it makes sense. Hey, you don't want to like lose your mind just like staring at it like every second of every day. So yeah, today just tried to play it cool. I saw that the VIX was coming in, so I was like, hey, this could be a sign that maybe we get a bounce into tomorrow. So that is what I'm going to be looking for. Hope everyone had an awesome trading day, and I will see you all tomorrow. Make sure you're hanging in there. These bearish sequences, these are to be expected in the market. These are completely normal, but you have to get through them in order to make it to the opportunities on the other side. Have a good night, everyone.